I mentioned Bill Gurley and Benchmark there. And Benchmark are kind of famed for their discipline on fund size.
Totally.
Now, you said before that fund sizes should get smaller.
Yeah. I think...
Go.
So I think we are operating in a crazy prisoner's dilemma situation where there's a bunch of capital that wants to go into venture still. And if you increase fund sizes, the industry as a whole needs to return a lot more than it probably will. And so if everybody reduced fund sizes, then we would probably be operating at a different level. We would be investing at lower valuations, and it would probably be better for everyone. Instead, we've got this continual upward march of fund sizes. And when you have a bigger fund size, you become relatively agnostic about the price you pay.
So if we just break that down before we kind of move further in that argument, do you think that actually LPs are still in market? You hear continuously about funds that are struggling to raise, whether it's the large kind of $20 billion PE firms or actually it's the much smaller micro firms. Across the spectrum, people are saying LPs have withdrawn or retreating in the last year.
Yeah. I think there are LPs that have withdrawn quite a bit, but then you see everybody's in Saudi Arabia right now. Right?
I want to start a startup that does shuttle service to Saudi Arabia from the valley.
It's insane.
Yeah. My favorite thing is actually the hypocrisy. I'm going to get in so much trouble for this.
Totally.
The hypocrisy of, we would never take money from there. First fucking recession comes, they are there.
Totally. I have no strong viewpoint about it, about whether you should take money from there or not. We haven't, but I think it is very hypocritical that all these folks who were anti-Saudi money are now over there just praising everything.
Totally. So we have that on the LP side, agreed. We do have funds that are starting to reflect what you say. Founders Fund halved theirs.
Yeah, exactly.
Do you think we'll see more?
I think we'll see more. I think we have to. I think
why
founders,
would managers do it? If you think for them it's a loss of fees, it's not in their interests.
Well, it depends. If you're fully returns focused, it could be in your interest.
Could be.
And I think a lot of the large funds have gotten so large that they're really more management fee focused than they are returns focused. But I think for the returns focused funds, and if you talk to Founders Fund, that's what they say was the reason they did it. They felt like 1.8 was too big. They wanted to go to 900 because they wanted to stay focused on returns, and they felt like that was a better size.
Do you think we'll see funds give back funds?
I don't know. I don't think so.
Yeah.
I know that that's happened in the past. I just don't see it happening this cycle. And probably if it were to happen, it would have already happened.
I agree with you totally. Can I ask, how big's the latest BTV fund?
So we're a $150 million seed fund and a $75 million opportunity fund.
I was with an LP last night, and they said that when you do outcome scenario planning on a $150 million seed fund, well, I actually said $125 million, and they were like, way too big, way too big. How did you feel about your fund sizing on that?
Yeah. So we went from 75 to 150.
Yeah.
I think for us, it was more about how many checks do we want to write? What's the size of those checks? And what's our follow-on strategy?
Yeah.
Now, we raised over a year ago, and part of the reason we increased was in Fund 1, pretty much every one of our companies raised a follow-on round quickly after we invested.
Yeah.
And we were almost forced to do that follow-on round. If you lead the seed round and somebody good is following on, you kind of have to follow on.
Yeah.
And so our first check to follow-on strategy was totally out of whack because we didn't have enough data, but you have a great fund leading the next round at a huge markup.
Do you have to? Can you not do the strategy of, hey, you know what, we lead and then we're totally aligned to you and want the best for you, but we don't actually write anything beyond our first check?
You can do that. I think for a fund like ours, it doesn't really make sense I think for a lead investor, it doesn't really make sense because what ends up happening is some companies need more capital and not the ones that are killing it. The ones that are killing it are able to raise easily. But there are other companies that are doing well but need a little bit more capital, and you have to put more money into them. And they're doing well but not well enough to raise the next round.
Yeah.
And we've had companies like that ended up being super successful. Actually, one of the companies recently, we led a seed, and then we put a little bit more money in 6 months ago, and then they just raised at $100 million valuation from Andreessen. And we're really fortunate that we put that a little bit more money in. And I think if you don't do the follow-ons, like if your strategy is just to do one check, but you have to do some follow-ons, then you end up not following on into your best companies. You end up following on when you have to, which can be your worst companies.
I think follow-on is actually just an inherently hard strategy because it assumes that you can essentially predict your winners so much sooner than I think you actually can. I think me and you both been in this long enough where actually my winners are ones which I would not have put as winners first, and my winners are definitely not winners.
So I think that's true, but you do know your losers.
True.
So I know companies that I don't want to invest more into because, the founder doesn't have a sense of urgency or like.
But actually, the losers are the same as the slow burners that go nowhere to a 0.5x to a 1x, if we're being honest.
Yeah. I would say there are companies that I've had where I just know like there's very little chance I'm going to put more capital into it.
Do you tell them then?
No, I think it's like...
Because it's hard. You don't want to like burst the bubble of confidence and, hey, by the way, you're struggling and I'm not going to give you any more money. Oh, thanks, Sheel.
No, I wouldn't. So no, it's not necessarily that. Sometimes it's like the market hasn't developed the way we thought it was developing.
Yeah.
And there's an opportunity to pivot, and sometimes they take that opportunity and sometimes it works. But if they don't do that, then there's little chance that I think the market is going to develop the way we thought it originally was. So for example, we invested in a company in Southeast Asia that we were betting on the fintech market in Southeast Asia getting much bigger in a way that hasn't really developed. So then we have to think about, okay, unless they pivot into serving a different type of customer, we can't continue to support them.